Tesla Inc., ticker symbol TSLA, is currently trading at $332.72 a share. Yesterday was down 5%, though is up 3% in the pre-market. And if we go over the last 6 months, we can see the bigger picture. Stock is down about 8% since then, but was previously trading at around about $480 a share, and has had a steep 53% decrease, which has basically cancelled out all of the gains that were received from Trump winning the election and Elon's initial involvement. The people seem to be quite bullish on the stock, but obviously Elon has done things recently that people are not agreeing with, and the share price has dropped. Over the last year, though, you can see it is still up 31%, but very volatile and has had a recent 50% drop. So what I'm going to be doing is talking a bit more about the stock and then going to my automated stock valuation spreadsheet, seeing if Tesla is a buy or a sell using the discounted free cash flow model, comparable company model, and Venn Grimm formula for intrinsic value. If you're interested, please check my Patreon, but we'll talk about that more later. So as I said before, the stock is in a bit of a downward spiral. I think that's the only way to describe it, losing all of the pre-election gains. Over the last 5 years, the stock is still up 700%, but you can see Tesla has had these wild swings before, down 63% over the course of a year to then rebounding recently, but this drop does feel a bit different this time, and obviously with the other turmoils in the market. So what we're going to be doing now is, if we go back to my sheet and put in the ticker TSLA, TSLA, it doesn't work if you put in rubbish. This will load up all the latest company financial data so we can have a deeper dive. If you're interested, as I said before, check out my Patreon. It's the $4 tier, but enough of the hard sell. So price $225, market cap $706 billion, PE ratio of 110, very, very high. Market averages are around about 28. Earnings per share, Google Finance has been strange, but it was about $2.50, I believe, or $2.02. Beta is 0.25, meaning it is a lot more volatile in the market, as we have seen. Target price, analysts have it at around about $340 a share, though this has been downgraded recently. It was originally higher, but then a lot of analysts, such as RBC Capital Markets, reduced the target price by 27% to $320. No dividend, so we'll skip that. Now, revenues. We won't look at the trailing 12 months because this is the most recent report. And 97.96 billion. All-time highs, it is beating the prior year, but as you can see, it is slowed, which isn't obviously quite negative for a company like this. Net income, are they more profitable? No. Last year was the most profit, 15 billion, now it's 7.9. Free cash flow, is it most free cash flow? No, a similar story. Highest numbers were in 2022, then 23 was a decrease, but it's lower than that yet again. 3.6 billion. Operating cash flow versus capex. You can see operating cash flow is slightly increasing, but capex is very high. Obviously, operating cash flow minus capital expenditures is free cash flow. So if they were cutting the capex, then obviously we'd have good free cash flow. We can see capex has always been relatively high at Tesla. Shares outstanding. There's been some splits in here, but they're issuing more shares. They're not rewarding shareholders through buybacks. They're issuing more shares for capital. So let's have a look at the discounted free cash flow model. Let me just put in the average values here. This is the way of valuing stocks. Looking at their future free cash flows, discounting them to today's value. Also, we'll also put the weighted average cost of capital of that. So currently it's giving us $38 a share, so massively, massively, massively overvalued. And we'll do this one as well, actually, sorry. 1 second, let me just have a quick look at this. B74. Oh, because it's looking at those. Fine. Let me just yeah. So we'll look at this. $24 a share. Oh, we'll actually do this one. Sorry. $38 a share. So not a buy at all. We're expecting, based on the revenue growth, if they were consistent, we're expecting 150 and 136 billion. I don't think analysts are expecting that. 104 and 132. Sorry, 110 and 132. So, okay, they're expecting quite high. We'll bring that down a little bit. Net income margins, I mean, if we look at the last year, that's going to be 7%. And then price to free cash flow, we'll take an average of these last few years. 54%. Oops. So, $18 a share. Doesn't seem to be nice. Obviously, weighted average cost of capital is pretty high. Bring it down to 8, it's going to bring us a bit higher, but $40. So discounted free cash flow hit to stock, but with 162 and 155 on the average, I can see why. Ben Graham formula for intrinsic value. We'll just quickly go through this. Earnings per share, 2004 cents, as I said before. I don't know why the Google sheet wasn't working. So unless they've got massive, massive growth, analysts are saying 34%. $71 a share, so not a buy. So fine, let's have a look at the comparable company model. What I'll do is we'll put in some car companies first. We'll do Ford. What's Toyota's? TM, is it? TM. So this is Ford and TM, and we'll do GM as well. I know these aren't direct competitors, but there's, apart from BYD, which we won't be able to do, there's not a direct sort of energy company. So what we're looking at here, also ignore Toyota because it's in yen, so obviously this will be a lot higher. I think USD to yen is about, what, 100, 150. Okay, fine, so divide all these numbers, but we're looking at the particular metrics here. So enterprise value, Tesla is either the largest or second largest. Let me just do it. So we've got 62708, 400 billion, fine. So, and then 46. If I was better at maths, I could do this in my head, and 300 billion. So Tesla's the largest. Toyota is the most in terms of revenue, 300 billion. Tesla still has the highest growth rates. EBITDA, second highest. Net income, I'll just do it again. 5098. Oh, I put that in dollars, my mistake. I should put a currency conversion on this. Toyota is the most profitable. Profit margins, highest margins. Price to sales, you can see Tesla very high. Price to book, Tesla very high. PEG, Peter Lynch's price to earnings growth, Tesla very high. EV to revenue highest. EV to EBITDA highest. PE highest, and Ford PE highest. $75 a share, which is actually quite consistent among all the models, I would say. Oh no, it wasn't. Sorry, it was $40 and $24. Yeah, so not too good there. Ben Graham had it about $70. That was it. So not a buy according to car companies. We'll look at some sort of similar companies here, which are some tech companies, because everyone says Tesla's a tech company as well. So we'll do Microsoft, MSFT, we'll do Apple, and we'll do Google as well. Obviously, once again, not direct competitors, but in terms of the constituents, these are in the same ballpark, I would say. So once again, this is going to load up all the latest company financial data so we can have a deeper look. So in terms of EV to revenue, it is a buy, but all the other models say it's not. EV to revenue, EV to EBITDA, sorry, EV to EBITDA, PE, Forward P gives you an average of 152. It is in the middle of the park here for EV to revenue, EV to EBITDA very high, PE very high, Forward P very high. Margins nowhere near like a tech company, 7%. Everything else is 30s, 24 at the lowest, which is Apple. Revenue growth rate is the highest still, but not as profitable, nowhere near as much revenue, and everything else is not looking good. So yeah, overall, I would say avoid Tesla. The models do agree. I don't really have that much faith in it. Now, it is a $700 billion company, but it just, at its current prices, I think there's just too much risk. I think you'd rather, people who've been in since 2020 and made 1,000%, good for them, but it's, a best case scenario, despite all the, robo taxis and Optimus robots and all that stuff. I just think, yeah, it's a very risky investment at the minute. Right, guys, thanks for watching. Please give a like on the video if you enjoyed. Subscribe if you're not already. Check my Patreon. I'll catch you guys next time.